Good morning, traders. This is Pete. Welcome into this new video, a new trading kitchen video. I've been quite far away from posting new content just because I was working on such a kind of algo trading with artificial intelligence. But I'm not pretty much sure about it. I do prefer mechanical trading yet, maybe because I'm not skilled enough about artificial intelligence, but anyway, mechanical trading remains quite profitable, much more profitable to me anyway. And this will be the first video in which I will show you my how do I really work on a trading platform using the professional trading platform, which is multi-way to me. I don't think it's the best one, but it's the best one to me. I mean, just because I'm a Mac user, so I found pretty much good with it. But there are so many other trading platforms. Anyway, on the last video that I will post here, I show you how to using volumetric indicators to spot supply and demand zones on TradingView. Okay. In this video, we'll show you the same thing, but using multi-wave, using a professional trading platform, and my real intention is showing you the difference between a non-professional and a professional volumetric platform. Okay, and the difference is, I mean, huge. Okay, my trading lifestyle was completely changed as I discovered the volumetric analysis, okay, using a professional trading platform. First of all, let me same old stuff, I know. Subscribe to the channel, press the thumbs up button, ring the bell, same stuff, but I really appreciate if you can help me to grow my community. This is the only thing I want. Don't want your money, don't care your money. I have a Discord channel, Discord group, in which I share my intraday and multi-day swing trading ideas, some educational content like this, and also other content that I find interesting for you. Group mentorship, and if you want, and a trading journal with backtest like this. This is only a screenshot, but in the description below you can find the link, and you're going to see all my trading made with future strategy, and with all the backtest, all the screenshots, so you can understand the reason by which I open a trade. This is totally free, so I think that it could be quite good for you guys. Anyway, let's go straight into the chart. And okay, so this is one template of my multi-way trading platform, and there are so many other templates that I want to show you, but probably this is the best one to that you can use to really spot the price action, the reaction zones. Okay, so first of all, in the last video we talked about cumulative delta, okay, and we talk about the point of control, okay, and I told you the importance of switching the POC. I mean, when you see something like this, so the POC is going down and with a strong reaction, past the last POC level, okay, it means that probably something is going to change. Okay, so this is the first thing that I really am looking for when I try to identify a supply on demand zone. Okay, now we can call this supply and demand zone, we can call reaction zone, we can call them order blocks. Okay, I mean, everything is good to me about the name, but I don't care about the name, I care about the result. Okay, and so what I first, this morning, obviously US is not open yet, but the logic behind is the same, and this kind of triggers, this kind of setup is good for every kind of strategy. Okay, no matter if you are scalping trader, no matter if you are intraday trader, a swing trader, a position trading. Well, I don't know for position trading, I'm not position trading, to be honest, but I suppose that this is not a strategy, this is a setup. Okay, this is just a logic. Okay, it can be adapted to any strategy. Okay, so we are on 5 minutes time frame, and I want to show you what I really looking for, okay, in terms of reaction zones. Okay, so here what I see a good impulse, bullish impulse. Okay, and as you can see here, we have the first BOS break of the structure. Okay, and now price is going up there. So the first thing I want to the first thing I wonder is where the impulse that broke the last structure had started. Okay, and right by now on this for this instance, this is the candle, 5-minute candle, okay, that I'm looking for. Okay, because from this point we made this huge impulse that broke the structure here. Okay, this is the first thing. Okay, inside this candle I'm going to have a deepest analysis. Okay, looking the same thing, looking how price developed inside this movement. Okay, same thing at the beginning of the impulse, so here. Okay, so for every impulse basically I made this kind of analysis. Okay, the target, what I'm really looking for is understand where price began to react. Okay, where are volumes, the real volumes. Okay, so looking here, for example, 9, so London opening, if we zoom, we have all the flow values of the footprint. Okay, but we're going to tell you something about it later. So we have a strong bullish movement. Try to really understand the logic behind the price movement. Okay, so we're going down, we probably reach an important zone right here, so probably here. Okay, this is only an example. I don't really know. Okay, but this is what I suppose. So price. Oh, sorry. One thing that I forgot to tell you is these values, these numbers. These numbers are very important to me because they show the real volume, okay, inside every candle, okay, and the results in terms of delta participation. Okay, so the difference between buyers and sellers, okay, between bid and ask. So if we do have a blue color like here and like here, it means that we have a strong amount of buyers. That doesn't necessarily means that price is going up. Okay, this is the logic. This is probably one of the consequences. Okay, is an objective value. So inside here we have a strong bullish volumes. Okay, so the first value is volume, the amount of contracts that we do have in a candle. The second is delta, just the delta. Okay, so the difference between blue and red, the difference between bid and ask. In the third we have the delta change. I mean, how is going to change between the previous candle. Okay, so from the previous to the actual candle. And the last one is the delta percentage, which is the same value on percentage. Okay, so same thing. Okay, so if you know that how to read these values could be everything much, well, it's not much easier, but it's less difficult. Okay, so right here, what we have strong bullish movement, price reacting here very good. This is the body of the candle. If you don't see anything here, means that this is a long tail. Okay, so long tail means strong reaction. Okay, look at the POC. The POC is red, so the POC is bearish. Okay, but price made this huge reaction. What does it mean? This is what you have to wonder to yourself. What does it mean? Why we have the POC red? Okay, so the greatest amount of contract inside this bar is here. Okay, and this bearish. So why price did not make a move here, a strong move here? Okay, this is the first thing that you want to tell you. That you must wonder to yourself. And the reason is because we have a strong amount of buyers coming in. Okay, I saw this same thing just because we have a 287, which is the hugest, the biggest number inside here. Okay, on the bullish side. So it means that probably these volumes became trapped sellers. Okay, if we are here, if I see this, okay, I see this is just, I mean, the first alarm bell. Okay, trapped sellers, price then make another move. This is what you call price action, candlestick pattern. Candlestick traders call it a doji, so an indecision movement. Okay, in the decision candle. Okay, but we do have the first switch of the POC. Okay, here. So the value area is changed. What buyers and sellers are contracting, okay, is that price. This is the level of the price, that new level of the price that is being accepted, okay, of the market, by the market. Price then make a new low here because sellers, as you can see, try to push price down again, but it was not able to, because this is the low that we do have, and this low has not been broken anymore. Not only, if you see, when I see this huge color, this huge histogram here, which is red, so we have a lot of sellers here at the bottom of the candle. Okay, my logic says if I see a huge amount of sellers here, maybe price will come down strongly, but it did not do. It didn't do. So these are trapped sellers. So the same logic behind here. Okay, but is here it is so much more clear. Okay, if we take a look on the value to the footprint, okay, this is clear. So this is an imbalance, okay, a seller imbalance. We have 1, 2, 3, 4, so huge amount of sellers here. Okay, and why price is going up? For the same reason I told you before, because we have a strong amount of buyers entering the market. Okay, new switch of the POC. Usually price market make at least 2 switch of POC. Okay, it's quite easy to see a strong bullish, a strong reversal movement. Okay, so just one switch of the POC. If you see that, probably is a news or is a market opening. Okay, so here we have a clear switch of the POC. We have a strong look at this. So this is my favorite candle. Okay, why? Because we have switch of the POC, we have cumulative delta that engulf the previous candle, we have an engulfing also on the price, we have a huge entering, a huge amount of bullish volume entering the market with the 21 of delta percent, with 227, which is not, I mean, it tells me anything, the individual number, but if you compare this number with the previous three numbers, you see this is a huge amount, okay, of volume. And we have 250 of delta, same thing here. Okay, so basically this is a volumetric engulfing. So what does it mean? We have a strong amount of buyer coming in here. Okay, so this is the good zone, good candle to consider. Okay, now how to make it perfect? The first thing is premium and discount zone. Okay, so if I want to go buy, to go long, I take a discount zone, so here. So the POC to the bottom, from the POC to the bottom. Okay, and then we have aggressive we have trapped sellers here. This is my stop loss. Okay, so this is how I make my zone perfect. Okay, then I will wait for the price to retest here. Okay, and make another trigger here, maybe on 1 minute time frame. Okay, so if we go down 1 minute time frame on the London Open, price enter the zone. Look at here. Look at here. 24% of delta, but no effort, no result. No result. The POC is going down again. We have no. Price did not break the structure, the high of the last candle. Okay, remember it's always a matter it's always a matter of result. Sorry, I can't find the word. Effort and result. Okay, so try to find the reason and understand the logic between effort and result. So the effort of the delta and of the cumulative delta and the result of the price. Okay, the biggest signal you can have is when delta, cumulative delta and price tells you the same thing. Okay, like here. Okay, look at this candle. We have a strong bearish movement. Okay, confirmed by delta, so volumes confirmed by the price, confirmed by strong cumulative delta. So what does it mean? Two choice. The first, price is breaking the zone. Second, this is a clear liquidity catch, liquidity grab. Okay, stop loss hunting, I called it as you want, which is not correct, stop loss hunting to be honest, but this is the case. Okay, same thing like we saw before. Price made a huge bullish movement, so these sellers became trapped sellers again. Okay, when price is going out and is going out the zone and made this huge switch of the POC, here you can enter the market or you can wait for a retest. Okay, this is also a very good candle. Why? Because we have a strong indecision here. We have the look, the POC is gray, so there is no decision between sellers and buyers. Okay, who is winning here? And we have this volume profile, which is the lowest part, the bottom part is red, the highest part is blue, so a lot of fight here. And then if we have this strong candle here, means that probably buyers won this fight. Okay, look at here, we have cumulative delta here, which is not broke the previous structure, but the candle did it. So look at price, effort, result. The effort is low, the result is very, very high. Okay, price re-enter the zone, retest. Where retest here on this first low volume here, and then goes up. Okay, so this is just an example of a trigger, but what I want to show you, to really show you, is how easy is trading is, which is not easy, how less difficult trading is if you really understand the logic behind the market. But you can do it only if you have the objective numbers of volumes. Okay, and you can have it only use it a trading platform like this. Okay, I do use trading view just for analysis, which is probably the best platform that we can have to analyze the market. But the trigger, to really understand what's going on behind the bars, there's no way. The only way is this one. Okay guys, that's enough for today. I hope you like this video. Let me know what you think about using the comment section below. Same old stuff, subscribe the channel, help me to grow my community. And well, that's enough. Hope you like this video, and see you in the next video. Thank you guys.